What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we are taking a look at Costco stock. This stock is pretty much always doing well, but this year it is up 63%. In the last 5 years, this stock is up 218%, and their revenue and net income charts are almost perfect. This is not a super fast growing company, but it's growing at 8 to 10%, which is pretty healthy. And last year they did, or really this is this year, $254 billion of revenue. And as you can see, it's very consistent. There's not a lot of ups and downs. There's not any big drops. It's really just consistent growth year after year. And then we see free cash flow is a little bit different, where it's a little bit more up and down, but that's still not necessarily a bad thing. The net income, the bottom line, is consistently growing, and the net income is actually growing quite a bit faster than the revenue. As you can see, the last 5 years, it's averaged 15% growth per year, which is a lot. So they just went from 2.3 billion 10 years ago to now 7.3 billion for last year. Then we take a look at their cash to debt ratio, and the cash is slightly higher than debt and capital leases. So they have that covered. That's nothing to complain about there. Shares outstanding, good. ROI 27% is very strong. And so I would, let's see, I don't think I've ever owned this stock. Let's see. Yeah, I don't think I've ever owned this stock. Usually because when I check it, the valuation just seems really high. And so if we go ahead and look at their valuation for the last 10 years almost, you can see that in the past it's been as low as like a 23, and right now we're at a 57. The other tough thing with this one is it almost has kept going up. Really, the weird thing is it doesn't like hang out in a certain area. It kind of just has gone from a 22 all the way up to a 57. So now, I mean, anything above, once you start getting up here between 45 and 60, that seems really high, where it's like we need to come down at some point. But and I mean, most stocks right now are trading at valuations that are above where they normally trade. So it's kind of just that most of these stocks need to come down. But still, for Costco, I mean, I think like you could have looked at this when it was trading at 30 times 4 years ago, 5 years ago, and said, okay, this is pretty richly valued. Now I'm not going to buy right now because it's probably going to come back down to 23 like it normally does. But in this case, that was actually the cheapest you could have bought it in the last 5 years, because now it just keeps going up and up and up. So it's kind of weird the way that happens. I don't know if that's either because their growth accelerated, or is it because their moat maybe got stronger. I'm not sure what it is, but it's weird to see that, because with most stocks, they kind of they trade at a typical range for PE ratio, and this one has not done that. So if we take a look at what analysts have them doing, we can see they're growing $17 EPS this year into 19.6 next year, which is another insane year of growth. Then we have revenue growth of 254 million last year, 273 this year, or I'm sorry, not million, billion. 273 billion this year and 291 billion next year. So they just have strong numbers pretty much all the way around. You know, putting a higher premium is justified on this stock, but not this high. 57 is really high. That's like what Amazon trades at. So it doesn't make a whole lot of sense. But if we had a significant market correction and this stock came back to trading at, I don't know, it'd have to really come down to like 30 times earnings. If that was the case, then I would probably start making a position. But right now, I'm not seeing it. So thank you for watching, and I will see you in the next video.